Severe disability. It's one of those things that we don't really expect to happen to us, but it does, and it can change everything. And let's be honest, the cost of long-term care in Singapore, it adds up fast. If you're thinking, will my savings be enough? That's exactly why ElderShield was introduced. By the end of this video, you'll have a clear understanding of what ElderShield is, what it covers, differences between ElderShield 300 and 400, how claims work, what you can do if you need more coverage. Hi, I'm Fer from Dollar Bureau, a personal finance platform that talks about insurance, investments, and financial planning. Firstly, what is ElderShield? So, ElderShield is a long-term care insurance scheme that the Ministry of Health rolled out back in 2002. Its job is pretty straightforward: to provide monthly cash payouts if you become severely disabled and need long-term care. Now, you might be wondering, what exactly qualifies as severely disabled? It means you're unable to perform at least 3 of the 6 activities of daily living, also known as the ADLs, which includes basics like washing, dressing, eating, toileting, moving around, getting from your bed to your chair. If that happens, ElderShield helps cover part of the cost for things like caregivers, home modifications, or even just day-to-day support. The plan automatically enrolled those with a Medisave account and turned 40 years old on or before 2019, unless opted out. By the way, if you're unfamiliar with how Medisave works, we've got a video that breaks it down clearly. You'll find a link in the description below. Now, if you turn 40 after 2020, you wouldn't be on ElderShield. You will be something called CareShield Life instead. And if you want to understand how CareShield Life works, how the payouts grow over time, and whether it's worth upgrading to, we're releasing a new video on that too. So be sure to subscribe and hit the bell notification icon. But let's stick with ElderShield for now. What does ElderShield actually cover? ElderShield has 2 main versions, the 300 and 400 versions. Let's start with the ElderShield 300. This was the original plan, and if you're unable to perform 3 of 6 ADLs, it gives you $300 per month for up to 5 years or 60 months. Then came the 400 version, which gave you $400 per month for up to 6 years or 72 months. So if you're on ElderShield 400, you get more coverage and longer payout periods. Now, it's worth mentioning that the eligibility conditions are exactly the same for both plans. You just need to be able to perform at least 3 of the 6 activities of daily living. Simple and straightforward. But naturally, the next question is, how much do you have to pay for this coverage? Well, your premiums depend on 2 things: your age and your gender when you join the scheme. Generally, the older you are, the higher your annual premiums are, and because women tend to live longer, their premiums are slightly higher too. Here's something good to know. Once you start paying, your premiums are fixed for life. You'll continue until age 65, and that's it. No more payments after that. Also, one important thing to note is that the ElderShield does not come with government subsidies for premiums. That's a key difference as compared to CareShield Life, which does offer subsidies, especially for lower and middle income households. Again, if you want a full breakdown of CareShield Life and how it compares, make sure to subscribe to our channel. Now, even though ElderShield isn't subsidized, the good news is you can pay your premiums using Medisave. And if your Medisave isn't enough, you can even tap on the Medisave of your close family members, such as your spouse, parents, kids, or siblings. So now that we've covered how much ElderShield costs, let's talk about your options when it comes to opting out. Can you opt out of ElderShield? Well, yes, you can opt out if you want to. But should you? In most cases, probably not. ElderShield isn't meant to be your only form of protection, but it does provide a basic layer of support. If you ever become severely disabled, those monthly payouts can ease the pressure and makes a real difference, especially for your family. So unless you have a much better alternative, it's usually worth keeping. Let's look at how do you check if you are covered. Checking your ElderShield status is super simple. Number 1, log into the CPF website with your SingPass. Go to My CPF, click on Healthcare, and scroll to the Long-Term Care Insurance section. There, you'll see whether you're covered under ElderShield and whether you're on the 300 or 400 plan. Now, if you're covered and one day you need to make a claim, you'll want to know how that process works. So let's cover how do you make a claim under ElderShield. Step 1 is to get a disability assessment. You'll need to visit an MOH accredited assessor who will determine whether you can carry out at least 3 of the 6 activities of basic living. You can either go to a clinic, request a home assessment if that's more convenient. The cost is $100 for a clinic visit and $250 for a house call. Now, don't worry, if your claim is approved, this fee will be fully reimbursed when you get your first payout. Once that's done, just log into AIC's eFast portal using your SingPass and submit your claim online. If everything checks out, the monthly payout will be deposited straight into your bank account. Sounds pretty straightforward, but the next question is an important one. Is ElderShield enough? For some, it's enough to cover basic needs, but if you expect higher care costs or want protection that lasts longer, ElderShield may not be enough. Fortunately, there are ways to boost your coverage, so let's go over what your options are. First, you can purchase ElderShield supplements. These are offered by private insurers and give you higher monthly payouts, longer durations, or even both. They are designed to work alongside your existing ElderShield plan. Second, you can upgrade to CareShield Life. This scheme replaced ElderShield in 2020 for those turning 40 and above, and it comes with bigger benefits. Payouts start at $600 per month and keep increasing over time to keep up with inflation. But most importantly, CareShield Life offers lifetime payouts as long as you remain severely disabled. And yes, there are government subsidies too. Lastly, consider disability income insurance. This is very different from ElderShield or CareShield Life. Rather, it protects your income, not just your care costs, in case you can't work due to illness or injury, even if you're not considered severely disabled. You'll get monthly payouts that can cover up to 75% of your income until you recover or hit retirement age. So this is really about protecting your lifestyle, not just your healthcare needs. And that's it. ElderShield gives you a basic layer of financial protection. It's not flashy and it's not perfect, but it is something. And the great thing is you have options to level up your coverage if you need more peace of mind, of course. Whether that's through supplements, upgrading to CareShield Life, or getting a separate disability income policy, the key is to start planning early, ideally before you need it. If you are feeling unsure about what works best for you, don't worry. You don't have to figure this out alone. We work with experienced licensed financial advisors who can walk you through your options step by step. Consultations are free and you can find the link in the description below. Reminder, this isn't financial advice or a recommendation to buy. Always do your own research before making any decisions. If this video helped you, hit that like button, share it with someone who might find it useful, and don't forget to subscribe for more practical finance tips. Thanks for watching and I'll see you in the next one.